The bounce, to me, certainly on a technical level, EM continues to make lower lows. We're in a channel. I'm not terribly encouraged by this bounce until we really break out kind of, above the 100-day average. The 50's been the place that's been getting smacked down. But look, the couple things for investors about investing in EM that are important right now. EM can never outperform in an environment where there's a growth scare. It can outperform in an environment where there's an inflation scare. Now, I'm not going to tell you there's a growth scare going on here, but I do think that the nature of the way the trade tariffs continue to play out, and by the way, this is more of a, I think, kind of secular and strategic trade war. It's not going to be about manufacturing jobs. It's about control of the internet and data in the 21st century. We're not going to let up on that. And if you don't get China right, you don't get EM right. So I don't think it's an exciting time to be putting money to work, even though, you make the most money in emerging markets when things go from just terrible to kind of bad, and I don't think things are just terrible yet.
All right, Larry, let me turn to you and your thoughts on the U.S. market. You say that you need to make a distinction between whether you're a real bull or a fake bull, and so I guess my question is this bull market a real bull market or a fake bull market?
Well, look, there's no question that the traditional bull market is very different from what we're seeing today. This is not my grandfather's bull market, because in a real bull market, you want to see broad participation in the market. In a real bull market, you want to see a steep yield curve. In a real bull market, you don't want to see 10 stocks leading the market averages. And just as Tim mentioned on the emerging markets, in a real bull market, you recognize we're in a global economy. So you don't want to see the type of divergence that we're seeing here. So we have a world set up where you've got real bulls and you've got fake bulls. And I think by definition, you can be bullish on the U.S. economy, but can be concerned about the major market averages in the U.S., the composition and the valuation. And that's where the opportunities lie here. So I think when we look at who's a real bull, if you're a real bull, you'd be concerned about what's going on in China here and looking for opportunities. If you're a fake bull, you'd be hiding in the S&P and the NASDAQ, whistling past the graveyard, not concerned what's happening outside the U.S. And if you're a real bull here, Tyler, you'd recognize that the U.S. is maybe 25% of global GDP. So what happens outside the U.S. does affect S&P earnings.
Well, it sounds to me, Larry, like you think this market has got a lot of bull surrounding it.
I think there's plenty of bull. There's a lot of people that need to go home and look in the mirror and ask themselves that question. Am I a real bull or am I a fake bull? And you know what, Tyler? We love the fake bulls because they leave the rest of the global economy as opportunities for us. When we see blood on the streets of the emerging markets, valuations become compelling. When you see outside of those major market averages, small caps, mid caps, lots of opportunity here, Tyler, in things like financials. If it's a real economy, those are going to shine through and valuations will be compelling.
You have gotten more words into 120 seconds.
He should be on Fast Money. I've never seen anything like that.
That was a tour de force, Larry. Tim, you get the last.
What a way to end the week, Tyler.
Yeah, you bet. There's no bull there.
As a mean reversion guy, I don't like seeing the rest of the world underperform so much. We talked about that last week, Tyler. Bottom line, I think EM underperforms if the U.S. finally underperforms.